Hey, everybody, welcome to my live stream. This is a special live stream because we are launching the mobile app for Victor H Investing. And it came with a lot of hard work. So, out of the gate, I wanted to thank C Money, who is my partner, development partner. You've done a just excellent job. I look forward to showing you the app, showing you what we came out with. And I hope that you guys become part of the development of this app, that you put in your feedback and help us build this app so that it really becomes a great tool for investors. Let me start off by kind of sharing what the goal is, what the mission statement is with this app. Investing's hard, and investing can make people very wealthy. That's a fact. So we wanted to make a very simple app that you can run on your phone and really get into quality stocks, understand quality companies, and make it as simple as we can and really deliver that simple UI. And as you become a better and better investor, you can continue to grow your knowledge and your ability. But this is a great place to start. It'll be convenient, it'll be in your pocket, in your uh, backpack, in your purse, wherever you keep your phone, and it'll make it really simple, really easy to do. So we'll be delivering functionality, content, very timely content, and we hope to deliver simplicity and value. So as we go through the app, we'll go into some examples. And on this live stream, I hope to look at some companies with you, and we're going to use uh, the app itself to analyze companies, go through them. And if you've attended my live streams, you know what I'm about. We're going to look at the business, understand the business, then we're going to look at fundamentals. And then we'll see if it's an attractive company, if it's worth looking further into it as potentially a good investment. So that's what our intent is with the mobile app. It should be interesting to look at. Now, since it is day one, we would love to have people get signed up for the app. And we're running a special offer for the first 20 takers, which is you buy 1 quarter, you get 1 quarter free of the app. So uh, if you get signed up with the iPhone, pretty smooth process. We've got um, a code here for the Apple Store. It'll take you straight to the app. And we also have an Android VR code. If you get signed up on Android, there'll be one extra step. You'll need to take a survey. The survey will get your feedback on what you want to see in the app, and then you'll be all set up. But click the one that you run. I'm going to be running today's demo on an Apple device, but I ordered, coincidentally, I ordered my Android device. I'm switching from iPhone to Samsung, and that's going to happen soon. So I'll be using both versions, and we'll be able to talk to both on the streams. All right. So what I thought we could do is we're going to look at the market very briefly. We'll let some people join. Looks like we have 17 people on the stream. Thanks so much for joining. That is awesome. I'm going to give it a few minutes before I start the demo of the mobile app, and just to kind of get our head around the market, where we're at, what's been going on, and then we'll get into the app in about 5-10 minutes. So today's in trading, it was a little bit reverse of what happened yesterday. Yesterday, healthcare took a beating, and they've been getting beat up this week. United Healthcare still took a beating, right? Geez, is it incredible? United Healthcare has lost more than half its market cap in less than a month. This is the number one health insurance payer in the United States, and it lost more than half its market cap. That is incredible. Just bad news after bad news. And the latest bad news is the Department of Justice is going to investigate United Healthcare because they suspect that they maybe were incorrectly billing on Medicare. Not sure that's true or not. I don't think it's true. I think United Healthcare is a pretty legit company. I was a stockholder of United Healthcare for like 5, 6 years. Very happy with my investment there. But they got beat up today. They got beat up yesterday. It's like, geez, just pile on United Healthcare. They used to be 600 billion in market cap. Now they're down, way down in market cap. So it's incredible to see them fall. But a lot of other healthcare companies worked, and it was pretty green. The big names, Meta was down, but Meta's having a terrific week. Monday had a terrific day. Tuesday, terrific day. Yesterday was okay. I think it was up just slightly. Google is having a good week, but it had somewhat of a bad day. Amazon had a bad day, but is having a great week. And Tesla, similar. Bad day, great week. Microsoft didn't lose much value. That looks good. NVIDIA just lost a little bit. Broadcom's up a bit. And then Apple's had a bad week, and today wasn't too bad. Some notable names. Cisco announced their earnings yesterday, and their earnings came in quite well. This is an old school technology company, and they are making money. That's why their earnings were so good, and their stock's up close to 5%. So if you're looking for old school technology, Cisco's got a lot to offer investors there. Adobe's had a consistent run. Look at that. Adobe for a while was hated, and now it's been consistently going up. So that's good to see. So there's just some big names out there, and consumer staples have had a bad week. They had a good day, but I would not be in consumer staples too much because I think they're just going to fall behind. I think the big names in technology, communication services are going to just fly high again. The market's recovered all the losses that we'd seen from February 19th through, call it, the end of March. I mean, we had a really down drawdown that was for the ages. Well, we've made all that up. So we're back. We're back to even. So you didn't want to be out of the market or you would have missed that big move. So those are the big stocks that moved. Looks like we've got some people. Tom just joined. You didn't miss much at the beginning. I had my intro of the app, and I could probably, you didn't miss much. And I think we haven't analyzed any stocks, so I think you're good. Jay Zeb, what's up, man? UNH, ouch. You're telling me. Now, I have United Healthcare for my family, the insurance, and they do a nice job, man. My wife really likes their insurance. We've been with them for like 21 years. We've raised 2 sons, and I only have good things to say about them. And I know people like to beat up on insurance companies, but man, this company's just been, really beat up. We can take a look at United Healthcare, kind of take a look at where it's at, and we'll see what that stock's been doing. And for everybody else, if there's a stock you'd like to look at, please suggest it in the chat. And if I can, I'll review it. And especially if you're one of the members on the channel, I most definitely will cover it. But just put a stock out there. I got one here from Jay Zeb. We'll take a look at United Healthcare. The big stocks, what's interesting is some stocks, the most expensive ones, Microsoft, NVIDIA, some are doing okay. Meta's doing okay. Microsoft's okay. NVIDIA's in the green again. Boy, that one was down for a while. But Apple's not doing okay. It's down 15%. Google, not okay. It's down 13%. Tesla, it's in the not okay category. So the big caps are not completely safe. You got to know which one to go into. And as we talk about this mobile app, that's what I hope you learn is what's the difference between Meta and Apple? Why is this one going down? Why is this one going up? That's a question that I'm going to answer in this stream. We'll talk about what makes Meta more desirable than Apple right now. Why are they going up while Apple's going down? So we'll get into that. All right. So we covered that. Now let me jump over to the mobile app. And I may have taken too long, but let me see if I could start broadcasting from my phone. And we're going to go on the app from this point forward. And I'm going to show you the app. So this is the premiere of the Victor H Investing mobile app. And again, I wanted to thank the C Money team. We started working on this months ago, and I could just tell you that I'm very grateful to them for the effort they put into it. They've put a lot into these screens. Let me show you what we've got. So when you enter the app, and you don't have to pay to download the app. You can download the app. There'll be content that's available to everyone. And then there'll be content that you pay and you would get that additional value add content. We're going to have the screener automatically suggest stocks that would fit in a category of high growth or steady growth. And these screeners we have preset with some good solid numbers. They're not going to be perfect, but they get you on your way of showing you examples of companies that are good high growth companies. For example, the app is suggesting Catalyst Pharma. And Catalyst Pharma is a stock that I've owned for a while. It doesn't mean that just the stocks that I own are going to appear. It's just an example I wanted to show because I've known Catalyst for 2 years and can really speak to it. And this stock here is a high revenue growth stock, but it also produces free cash flow. Free cash flow is one of the key measures that investors look at to see if a stock is really worth a lot. And Catalyst delivers free cash flow. And when you basically value that cash, you weigh it, it gives that company a particular value. In the case of Catalyst, it's worth far more than its current stock price. If you look at the value per share, it is much higher. You see this line here. It is much higher than its current stock price. And this stock has been flourishing. It's just a really good stock. So that's an example of how simple it is to get examples of, hey, these are high growth companies. And you can look at free cash flow, which is more complicated finance calculations and so forth. But you can also look at earnings per share for Catalyst or whatever stock you're looking at. And earnings per share is probably the most heavily used metric on Wall Street because it's simpler. Once a company announces how much profit they made, they divide it by the number of shares outstanding, and that's your earnings per share. Now, some of the legendary investors, Warren Buffett, Charlie Munger, Howard Marks, they don't look at earnings per share because that number tends to be very highly influenced by management. But it's still useful to me. I still look at it because it shows how they're performing to the expectations of Wall Street. So that's why I look at it, and I still include it into my analysis. And you could see very quickly, the screen will give you an earnings per share value of the stock. And the delta being the difference between the stock price that the stock is trading, $23.78 and 26. So based on earnings per share, Catalyst doesn't look as discounted, but based on free cash flow, it certainly looks very discounted. I've owned Catalyst for a long time and doing great with the stock. So that's a good stock for me. So very quickly, we're trying to show discounted free cash flow valuations and earnings per share. Let me say hello to some people who joined. Anderson, how are you, sir? It's been a little while and good to see you. Thanks for the comment on the app. Tony, good to see you. Thanks again for the tip on Reddit. I'm sure you saw that I bought Reddit today, and I'm excited. I'm excited that Reddit was discounted by 8% and I bought some shares. All right, so moving on. So on Catalyst, using Catalyst as the example, some other things that we've got in there. So first, trends. Now this graph shows the chart for one day. We're looking at making this a little broader of a trend, maybe for 1 year. And that way you could see how the stock's been trading. For those who like to look at the candlestick charts, we've put those into the app so you can take a look at those and look at how this particular stock has been trending. Now we're getting to my favorite chart. And the reason I like this chart is we're looking at the stock price line here in white, but we see different bands of, is this stock have more upside than downside? In this case here, it's got more upside. We've got more bands above it that show that, hey, once we get closer to the top here, we're probably dealing with a stock that's either priced at fair value or maybe overpriced, priced at a premium. So again, try to make it simple, right? And you could say, hey, you know, we're following this stock, and based on the valuation that we had in previous screens, you could see that, hey, this stock might have more upside. And that's what the visual depicts. And I really like the visual. Good job, team, on that one. When they showed me that graph, I really liked it. That's been my favorite. Now, some really good slides on, this is revenue growth, and the percentage is in white. So a good company should continue to grow. You'll hear this from me over and over again. And if you look at a business, if you see that their revenue keeps going up, it tells us that they're getting more customers. So their product is attractive enough to get more customers. Or maybe the same customers are just buying more of the product or service. That's good. And their product's so good, the company's able to raise their prices. All those things are revenue growing aspects of a company. They are characteristics that show a very good business, a very desirable business. And Catalyst delivers. You see how we have an upward trend. This is upward. So that's very good. And we can see that the growth rate has been coming down, because as you get bigger as a company, the math gets a little harder to keep that percentage growth. So you could get the charting there. Profit momentum. So you can see here, we've got either quarterly or annually the profitability of this company. The profitability has also been going up on Catalyst. But very quickly, you could be sitting on a subway, riding the subway. You could do a quick analysis on Catalyst. You could see that, hey, you know, for some reason, Catalyst caught your eye. Very quickly, you can look at intrinsic value based on cash flow, based on earnings per share. You can look at the growth rate and see if the fundamentals look good for Catalyst. So very simple way of doing what, you know, I've been investing for over 30 years. And 30 years ago, I was telling my wife, we did just about everything with statements. And I did have a computer back then. But nowadays, we do everything, you know, on Google Sheets and stuff. What we try to do is simplify that down so we can just have it in our pockets. Just everywhere we go, it's in our pockets. So we can be an investor 24/7. Not saying you should do that. You should go have a life. Go have some fun. Go have weekends on the beach and so forth. But you might be a professional working, right? And a lot of your time is spent working to make money. Great. Then you save some of that money and invest it. So this tool would just be another way of you being able to look at companies. So that's the tour of the amount of information you can get on these companies. So we have a couple categories that will be presented to users. You have companies that have high growth, and we pick them off just very simply. Are they growing their top line? If they're growing their top line, they're going to be listed here, like ASML, HIMS, NVIDIA, of course, they're growing nicely, right? AppLovin, and so forth. Shopify, Palantir, right? Those all qualify as really high growers. Now, value investors will also look at companies maybe that aren't growing as fast, but are really profitable. And those could be in the steady growth. Companies like oil companies, ConocoPhillips, ExxonMobil, really solid oil companies. They pay dividends, they make lots of money, and so forth. So, steady growth would be companies. And we tried to filter them so that we're giving you companies that met a minimum standard. Like they're not losing a bunch of money, but they're high growth. They have to be a certain profit level and they're high growth. They have to be a certain profit level and steady growth. So you're kind of dealing with a little bit of a quality check before I got to your interface. And then the last category is Victor's Picks. I'll be publishing the stocks that I think are really dynamite for a given month, and I'll also be recording content. And it's going to mirror my YouTube channel as well as the app. On the app, I'm going to try to make it super simple, very clear, and easy to follow. And the picks will be published. They'll probably be changed at least once a month, maybe a little more often, maybe a couple of times a month. We'll see what ends up being the best frequency to give investors, that edge. So look for that. Victor's Picks will be available to anybody who's a paid member through the VIP program. And right now you can get signed up. If you sign up, and you can get if you sign up for 1 quarter, you get 1 quarter free. So it's a pretty good offer. And it's for the first 20 takers. So take a look, download the app, take a look around. And if you'd like to get signed up, there's a pretty strong offer out there. We also would like anybody who uses the app or gets signed up, we'd love to get your feedback through a survey. And if you can provide your feedback, we'd be very grateful just to understand what is, the content you're looking for. And, give me some feedback so I could, tailor both functionality and then content that I cover based on what you think is interesting and valuable, make you a better investor. So we went over the different screeners that automatically appear. You don't have to do anything. You just log into your app and they're presented to you. You can have your watch list. These are your personal watch lists, and have them, on your app. So maybe you're on the subway again. Maybe Catalyst was a stock that you wanted to add to your watch list. You could do that on your app. Now we're getting into the community and content. So here I'll be publishing both articles, posts, videos, and a lot of them will be available to anybody who downloads the app. And then we'll have VIP content as well. And VIP content will really be where I'm trying to go that much further to just provide, the best information that an investor would want to understand. As you guys know, I do a lot of research and really track super investors. I'll be publishing data on that and seeing what these super successful investors are doing, so we can pick up some ideas from those investors. As well as we see markets change, certain stocks become less favorable or bad, and some stocks get good. We've been seeing gold stocks really do well. We saw that trend really begin about 6 months ago. That's the kind of stuff I'm going to put into the community and the VIP content. We have a guide in the content page on how to use the app and what's the, I think, whole philosophy and strategy that we're trying to follow, the investing strategy of being an active value investor, as well as I have a video that you can watch that gives another demo similar to the one that I'm showing here. And we'll be publishing content out there that I think is going to be really interesting. The VIPs will get more specific content, again, that I'm going to be writing. and putting it out there. And this one here is an example. This is a real life article on risk and reward. So that's our first version of the app. And again, we'd love for you to download the app. You got 2 QR codes on the screen. You got one for Android, one for Apple, and you could play around with the app. If you get signed up for the VIP service, you get a special offer right now that first 20 takers will have access to. And we'd love to hear from you on the surveys. So be sure to count that in. So looks like we've got some more people joining. Michael Anthony, good to see you. So good to see you, Tony. I think we already said hello. Carlos, what's up, man? Yeah, thank you for the comment on the app. All right, so we had talked about United Healthcare. So let's take a peek at United Healthcare and see what's been going on. So as mentioned, United Healthcare is a healthcare insurance company. They've been around for a long time. I've been a United Healthcare customer for 21 years, and I have 2 sons. One's 25, one's 20. So 21 years of, raising kids and using that insurance plan. So in those 21 years, did we have like a really bad experience with them? Nope. And we're happy campers with them. Now they have had a lot of bad press, which is it's kind of common for insurance companies to get bad press. And these guys certainly did. It was horrible to see their CEO get assassinated. And now their CEO resigned. He was the one that was taking over. It wasn't a very long process to find a CEO. I think he was like the next man up. He was president, so then he was promoted to be CEO. And he decided, you know what, it's personal reasons he cited. Maybe he just doesn't want to work anymore, and he decided to opt out. So they're bringing back the previous CEO. He had already retired, but he's coming back to help the company out. And he's going to try to help the company out. But this company has tremendous cash flows. That's why I invested in them way back when. And they have very high free cash flows. So when you look at their cash flow value, it's really sky high. When we look at their earnings per share value, really high. And a good reason for it is their stock price has just really been coming down. So when we look at United Healthcare's stock price just a month ago, it was much higher. It's been collapsing, but it's a quality business. It's just a really good opportunity. Now, I've said this before. If I did not own Elevance, which is their competitor, I'd be jumping all over United Healthcare. And now seeing them go down again, I might start buying United Healthcare stock just because it's such a good opportunity. When you buy into a stock that when everybody else is afraid or counting out a company that's a quality business, it's a really good opportunity, because at some point people will realize, hey, it's United Healthcare. This is a really stable industry. The people that are getting their health insurance from United Healthcare, it's not like they're going away. It's not like it's McDonald's and they're serving bad food so people stop going. No, people are satisfied with United Healthcare that are customers for the most part, and they're going to continue to be customers. United Healthcare is going to continue to grow. One thing that United Healthcare has done over a long period of time, and I'm going to show that in a bit, is they have grown. So look at this chart. Holy smokes. Oh, man. This is like a nightmare situation. This is what's supposed to happen when your balance sheet is terrible and the creditors are knocking out the door of the company. Like, hey, we're here to collect big debts. It's not supposed to be a company that's growing and creating more cash flow. Look where we are here. Look at this beautiful chart. You see the white line? This is the stock price. We are at the bottom. We're in the lowest band. This is the low point. This is a cheap stock. We're below cheap. And we have a lot of upside. So this is clear that if you believe that United Healthcare is going to exist in 5 years and they're going to be bigger, this is a huge opportunity. This is an opportunity to make money. You guys hear the knocking? That's opportunity. That's opportunity to make money. So let's take a look at growth. And this is the point I'll make. Look at this beautiful growth. The company's been growing top line revenue. So why is the stock price cratering? The world, the stock market is irrational. It is at times does not make sense. And this stock here, when the stock continues to grow their top line revenue, it means customers like the insurance service they provide. It means more customers are coming to them. More businesses are going to United Healthcare and saying, hey, we know that you're a good company. We want you to insure our employees. And that's excellent. So this chart shows quality. This is a quality business. Up, smooth, and up and to the right. Look how smooth and consistent that is. That is excellent. Profit and momentum. Now, they had a bad quarter, but for the most part, it's been a very profitable enterprise, especially their last quarter. So it's just sometimes the market is so irrational on some stocks. This happened to Uber not too long ago. Uber was counted out like, oh, Robotaxi is going to run them out of business. Well, now Uber's up 50% year to date because the market realized that's irrational. Uber's a strong business. And I think that United Healthcare is a strong business. And it is opportunity knocking on my door. And I said this earlier in the week when it dropped. I don't know how much. I'm like, geez, I'm thinking of buying, but I own Elevance. But at this point, I'm going to buy some United Healthcare because it's just too cheap. It's too good of a business. I made a lot of money on United Healthcare over the course of 6 years. And then I sold them in 2022, early 2022. So I know the company well. So United Healthcare is looking good, guys. I don't know what you guys think. Let me hear some chat out there. What do you guys think of United Healthcare? Is it a buy? Is it a sell? Is it a, this business is in trouble? Let's hear some chatter out there. All right. While you guys comment, let me see what's going on out there. So Tony. So what are you looking at? I'm on a computer. Well, hopefully you're seeing an iPhone screen here. I'm kind of mirroring my iPhone screen. So you're seeing everything that I would be seeing on an iPhone. And then, so Michael Anthony, PED report earnings after close of 4 new wells. So PED has a PE of 3.2. Wow. So Michael Anthony, what does PED do? And I'll look that up while you answer that question. So PEDEVCO Corporation, an oil and gas company focused on the acquisition, development, and production of oil and natural gas. Okay. All right. I understand now. Perfect. Whoa. All right. We got a taker on United Healthcare. Good luck with that. And remember, everything that I share, never investing advice. I don't recommend you buy, hold, or sell any stock. I just share what I'm going to do and what I'm thinking. So keep that in mind. Mike, the dividend investor guy. I know you're a fan of United Healthcare. So you're going with Elevance and CVS. Those have been dropping. And, I think Elevance and CVS are terrific. And I did buy more Elevance, by the way, and more CVS. So I'm kind of at a crossroads with United Healthcare because I think just the market sometimes is not rational. That's an example. All right, so let's take a look at the next stock we're going to look at, which is PED. Whoa, it's a low price stock, 68 cents. These always are a little riskier, right? Because if it's low price, it's probably a little risky. And we're not generating intrinsic value because they're probably in a negative cash flow position. Let's take a look at the discounted earnings per share. Based on discounted earnings per share, it's not valuing up. So let me look at the comments that Michael Anthony had. Yeah, really low PE. Interesting. The one comment I'll put on companies like this is that I've been buying into Oxy. And the reason for it is oil prices are really low. And especially when the news around tariffs and so forth was really ugly, oil prices kept dropping because the world, I guess, thought, hey, fewer people are going to drive around. They're going to be less oil, less natural gas being burned because the economy was slowing down. Well, once the tariffs were beginning to get resolved this past weekend, oil prices really took off. Now, while oil prices kept falling, I kept buying Oxy because I sensed that, hey, oil prices are not going to drop forever. And when they rise, so will Occidental. And so far, so good. I'm in the green on Occidental. And that was my expectation, was when oil prices recover, it's going to take off. PED is riskier than Oxy. But if you're using the same logic, I can't argue with it. I think it's good logic around PED, PEDEVCO, that if you think, hey, oil is going to recover some, I don't know if it's going to go up to $90 a barrel. That'd be great for my Chevron and Occidental stock, but that would be kind of a little too much to wish for, especially in 2025. But if it could get up to 65, 70, those companies are going to be just fine, especially the smaller ones that don't have a lot of cost. That's PED. Man, we got comments coming in hot and heavy. Thanks, guys. We're 30 strong. We got people chatting away. Thank you so much. Trade for Rice. Good to see you. Cool tiger picture. And then we got Carlos. You're taking a look at United Healthcare. Man, I'm telling you, I would not be surprised 6 months from now. We're like, oh, United Healthcare is up 30%. Yeah, because it got like destroyed. The stock price got destroyed. Meanwhile, I just showed you the charts on their revenue growth. They're profitable, generate a lot of cash. I wouldn't be surprised if like Warren Buffett stepped in and said, hey, I'm buying United Healthcare stock. That would cause it to go up. Sabir, good to see you. It's been a little while. Nintendo stock. I tried to buy Nintendo stock, and it's only sold on the Japanese exchange. I was able to set it up with my broker, but then I was going to have to pay for like $50 per trade. Thought, man, it's such a burden to get in that I was afraid it'd be hard to sell the stock if I ever wanted to. So I decided not to buy it. I really like Nintendo, really good company, and they make great products. And if you study their history, it's really neat. Like a lot of companies, they didn't start being an electronics company. They started in a very different industry and continue to evolve as the markets evolved. And now they're one of the best, technology companies. You look at Nintendo Switch, right? All the little kids in my family, they all have a Nintendo Switch. They love it. And when my kids were, little gamers. Now they're big gamers. They love the Nintendo products. The Nintendo Wii. I mean, just Nintendo. Good company. So Michael Anthony, UNG down much more. UNG crooks to be fined 2,000 million fine. Whoa. Yeah, I agree with you on, well, we'll take a look at UNG, but good comment on United Healthcare, Michael Anthony. I'm right there with you on that one. Mike, the dividend investor guy. You're still in the red on Oxy. You've been there for a while. Yeah. So Warren Buffett's in the red. So you're in good company. you and Warren Buffett are legends. All right, cool. Oh, UNG. All right, so UNG, let's see here. So I'm not finding that ticker. Let me see if I can find it elsewhere. United States natural gas. Okay. Now I get what you were saying. Okay, so it's the commodity. Got it. Okay. And I heard that natural gas was going up. And it did have, I mean, I think it's higher than it's been over the past year, but it's down from where it was in 2022. In 2022, it was sky high. Whew. It was way up there, like 6-7 times higher. And that's why, like in 2022, we had a pretty drastic sell-off of stocks, and only like oil companies did well in 2022 and a few others. But that was a brutal year. All right. So we are 25 strong on the stream. Thanks everybody for joining. Got it. Yep. Got it. Thanks, Michael Anthony. All right, cool. So any other stocks while you think of a stock to take a look at, let me just remind you can download the mobile app. You got 2 QR codes right above my head here, one for the Apple Store, one for the Android. Take a look, tour around. There's going to be an initial screen that you may get it, and it's written in Taiwanese. Just click the bottom kind of green button. It just means proceed, and you're good to go. And then you'll be in the app. And then once you get in, if you really like what you're seeing, there's a special offer for the first 20 takers. If you buy 1 quarter, you get 1 quarter free. Take a look. Pretty good offer. And you'll be granted access to all the VIP sections that will have the paid content. Herdo, good to see you. So let's take a look at BHVN. So BHVN. So Biohaven. So I haven't looked at Biohaven. Let's take a look here. So Biohaven. So Biohaven discovers, develops, and commercializes therapies for immunology, neuroscience, oncology worldwide. The company develops Trory, boy, that's a tough word. Can't do it. Which is a phase 3 trial for treatment for neurological and psychiatric illnesses. Okay, so they're in phase 3, which means they're close to commercial stage on that particular drug. They're a biotechnology company, 256 employees. Their stock has been down 57% for the past year. They're up 163% for the last 5 years. Okay. And their revenue, so they don't have revenue yet. So they're close to being commercial. So this one here is going to be a little tricky. This one is going to be studying their qualitative aspects of the company, trying to understand, and they'll communicate it to investors. What is the expected addressable market they're going after? What is the forecast? And I'm sure they have it in their investor site. They'll give you their projections of what they're trying to do, and then putting together a forecast, kind of like the best estimate you can make, and being able to drive toward, when they are generating free cash flows and when they are generating profits, what would the company be worth? But the app is not set up. This is simplified. It's not set up to do that. It's just taking the recent history and putting it in there. So on this one here, what I'll do is I'm going to flip over to a computer screen and kind of finish this one off, so we can take a little bit of a closer look. All right, so let's jump to their investor page, and their investor page should have the it should have some good content on, hey, here's our projections, because investors are not going to just say, oh, that sounds like a neat treatment, here's my money. Investors that are in the company are thinking, okay, well, is this one going to help, 10 people, 10,000 people, 10 million, 100 million, a billion people? What's the addressable market? And what is the price going to be on this, and so forth? So let's take a look, see what bet you they're going to have a presentation of some sort in here. So they reported their earnings. Okay. So here is a corporate presentation. Let's take a look. So Herdo, thanks so much. You're a huge supporter of my channel, and I just want to thank you again. You're always really generous on streams. I appreciate it. All right, so we got the corporate presentation, and let's kind of get familiar with this company. I've never looked at this company, but it looks interesting. So they're dealing with immunology, inflammation, neurology, obesity, oncology. Okay. So the stock price has really increased. I think there's believers, and it's almost like the market, there's some comfort in other investors wanting to be a part of this, even though they don't have revenue. So that there is some credibility in that. These guys are probably being followed by analysts, and we'll get into that in a little bit, who are experts in biopharma and are providing opinions on where they're at. So you see how they have their drugs phase 3, and then they have market, right? That means that they're close to commercial. That means they're going to get to charge money for their pharmaceuticals once they go to market. And they have a big portfolio, and 2 drugs are near commercial stage. And then a third one is kind of right behind those. Then they have 2 more drugs in phase 3. So if these all get approved, they're going to go from 0 revenue to some good revenue. Okay. Now, when these guys get into the science, I know my sphere of competence of knowledge, and I'm not a biology guy. I'm not a chemist. I'm not a, that type of knowledgeable guy. I'm more of a accountant, finance, masters in business software guy. So here we go. So this is their platform, easy to administer. People can administer themselves, inject themselves with their product. Okay. I'm hoping that they give us some type of forecast in here. Right now, they're giving us a lot of good science stuff. And bear with me, I'm kind of trying to get us to something that would give us a forecast. They have a good presentation with a lot of good information. I'm sure some of you out there are like, oh, yeah, I know what they're talking about there, which would be great. I do understand the FDA process, and I know that what they have to go through, it's stringent, it's good. That way, when these drugs are produced, they don't harm people. They actually help people. They can't just be creating drugs that people take and there's no positive outcome. It has to work. It has to work for most people that take it. So, boy, this is a long presentation. Well, at least they're thorough. They're providing a lot of good information. It's like a full course, college course in pharmaceutical science. And here's where they're talking about the FDA results. Okay, looks good. Geez, it's a lot of slides. I'm going to start skipping a lot of them. I want to get into financials. So bear with me, guys. I'm trying to get to some type of forecast, and I'm sure they're going to provide it. Here they're talking about their clinical trials. Okay, here we go. All right. So we're talking about addressable market now, right? So this is where they did their trials, and they're showing that they administered the drug to some people, a placebo to others, meaning this is fake. It's not supposed to do anything. And then they compare, did the symptoms subside with the drug or the symptoms the same on both groups? That way they can have a difference in whether the people took the drug or didn't take the drug. And here we have, for this particular illness, 6,000 people diagnosed, but they don't have a treatment. So these people are waiting for this treatment. And those are the people that have been diagnosed, and they believe that the whole market is 15,000 people because there's a lot of people that haven't been diagnosed. Okay. So that is interesting. Well, they gave us a lot of good scientific data, but no forecast. So, I think I went one too many, but okay. So you see, when you see big investors like Overland Capital, right, invested 600 million, they did their homework. It's not like, oh yeah, here's 600 million. They make sure that, hey, they are comfortable with it. So financial filings. Let me try this one more time. We know that presentation didn't give me much of financial data. Looks like all these are really scientific in nature. So I'm going to go back to their financials. All right. So all right, let me make this bigger because it's going to be a little small. So this is the 10Q for the first quarter of the year, 2025. Let's see what they had to say and see where they're at. So, and here we're not going to look at the preamble. We'll look at that in a little bit. Let me look at their financials. So they have 24 to 25. They did burn a little bit of cash here. They went from what looks to be like 485, 86 million dollars of cash, and they are down to 323 million. So they burned about $150 million of cash in 1 year. Understandably, they're paying for all this FDA process to get validated. And once they go to commercial, then they can start making some of that money. So that is understandable there. Their income statement is going to be missing revenue, and they have other operating costs. So once they start producing revenue, it's going to fill in that top line. All right. And then cash flow should be negative. Yeah, it is. Because that's going to follow the income statement. Okay. So that didn't tell me a whole lot. Let's see if I can. So we have. Let's see if this one will give me some more. No. I was hoping to see more written update on the company. So. All right, so press releases, maybe that'll get there. Yeah, here we go. All right, so they reported the first quarter results for 2025. We saw them already, so we're good there. They're talking about their cash, okay, and it looks like a hedge fund came in and bought a very substantial part of the company. Okay. And this is non-dilutive, meaning was it a loan? Okay. They completed the FDA mid-cycle review on their drugs, and we saw the charts, right? They're getting close on getting commercial. Okay. I'm seeing if they're expecting, hey, we're going to be able to start selling this for real in 3 months, in a year. When are they going to do that? So that's what we'd have to look out for. Okay. Yeah, I'm not picking that up. I mean, there's a lot here that lead me to think there's a lot of people that believe in this company. You have big money going into the business. Those things are happening. The stock, I think, had sold off. So maybe it's providing an opportunity. But this one here, now, it wouldn't be a good investment for me because it's I just don't have enough financials. But if you understand what they're trying to do and you're optimistic about it, you stand to do well with it, because in the past year, they're down 57%, because maybe just people like me are like, okay, I don't understand the science well enough, and I'm not seeing enough information to help me put together a forecast. So that's why there's hesitation on my side. Once they go commercial, I might look at the numbers and say, yeah, this is a terrific business, and jump in. So that's a decision you have in front of you. Is if you really understand the business, you understand the science, you understand their markets, it's an opportunity because you have an information advantage. But if you're like me, I have to wait. I have to wait until I see fundamentals, and then I could assess the company and make a decision. So thanks for asking, Herdo. I gave it the college try. And please bring it up again. Like if they go commercial, please tell me and let's look at the numbers. We'll look at the numbers together and we'll see what we got, because there's been a good number of pharmaceutical biotech companies. If you catch them early, you make lots of money. So I'd love to catch a winner early. Thanks for asking about that one. All right. So, hey, thanks for joining, Tony. Have a good night. All right. So you want to look at KR? Cool. Let's take a look. Oh man, Herdo, you're awesome, man. Thank you so much for the super chat. That's very, very kind of you. And again, once you get more data on BHVN, let's analyze it and see what we got. All right, so we're going to look at Kroger. Good, solid company. Kroger is a stock that I've owned for a long time, and I've done well with it. It's a good, solid retailer of food, and we're not going to stop eating food. We're going to eat food. It's going to be something it's a necessity. It's one of my stable stocks that, hey, you know what? Set it and forget it. It's also a very well-run business. When you consider they've been around for like 100 years, they're out of Ohio, and it's just a solid business. Really good management. And the stock is really priced well, and they pay a good dividend, like 2.5% or so. And right now, I think they've been selling off because the safety stocks, the consumer staples, they've been selling off because this week's been stupendous for technology, high growth stocks. They just have gone off the charts. Well, during those times, Kroger and all the safety stocks have been getting hit. So this one's showing a discount based on free cash flows. And then earnings per share is also really solid, discount of 32%. Just a solid business. When we look at the stock has been doing well in general because it's just Kroger. And if you catch, I own enough of Kroger, right? I own a substantial amount of shares. But, that's a good chart. That's nice upward. If you catch this stock at discounts, good stock to consider. When you look at where it's trading, you look at the stock price, it's right in the middle, right? It's probably closer to the top, and I wouldn't argue with that, than the bottom of the bands. Wouldn't argue with that because it's a quality business. People want this business, especially the year we're having where you have a lot of stock market volatility. And for a while, it looked pretty darn scary, right? Starting in February 19th, we had a huge sell-off. Well, during those times, people flocked to Kroger and other safety stocks. So this chart really is telling us the right story. When we look at growth, these guys are just a steady growing. You can see the trajectory is going up higher. And this is quarterly revenue, right? So the trajectory is higher. So that looks good. And the company's been profitable. Looks like for most quarters except 2, good solid profit. Earnings per share have been good. And when we look at the annual, it's been profitable every year for the last 10 years. Talk about consistent. This is like your offensive line on a football team. They're never really glorified a whole lot, but they're super important. You look at the Super Bowl we had, I believe it was won and lost on the line. The defensive line of the Eagles dominated, and you really realize how important your offensive line is because Patrick Mahomes is running for his life. And stocks like these are not glamorous. It's not NVIDIA getting all the attention. It's just a good, solid stock. So this stock here is looking good. It's just a good stock to consider. Good dividend payer. So Kroger is a stock that I really like. And I double my money every 5 years. Done. I'll take my chances with some of these small healthcare stocks. I like where Herdo was thinking, where, we're talking about a small pharmaceutical company. It's about to go commercial. If they are successful, 10 bagger, boom, maybe 20. It's just going to fly up, especially if they have something that is going to help a lot of people. Because early on, those folks will have to pay cash, and before the healthcare payers can start to cover that type of treatment. And folks will pay it because you know what? If you're going to provide a a cure or an improvement to somebody's condition, what is that worth, right? So, but Kroger is just a steady stock. Have steady stocks, and then you have some of these higher risk, higher growth, higher potential stocks. So a nice mix of the two. So that is Kroger. And then ACI. Is that what is ACI? ACI. Albertsons. Yeah. So Albertsons is looking good. Free cash flows are good. Earnings per share looks good. Now, I like Kroger more than Albertsons. I thought the acquisition was a good one. And I didn't like that the government blocked it. It really hurt Albertsons. And that was a really tragic thing because what you're seeing in the grocery companies, right? Now they're having to compete against Amazon, Walmart, Target, Costco. It's like, man, those are really powerful, strong competitors. So they were trying to merge so that they themselves could stand up to some of these competitors better. But the previous administration thought, no, that's going to hurt the consumer. I'm like, you guys are nuts. You guys are not paying attention to what's been happening. People can go into a Walmart and buy a pair of blue jeans, some auto parts, and food. It's Walmart's super powerful. That's not a surprise. They've been super powerful for 40, 50 years. And they've gotten even stronger. And that's who Kroger and Albertsons have to compete against. So they were trying to combine and be stronger together, but it wasn't allowed. I think it should have been allowed. But Albertsons really took the brunt of the sell-off. You see where the stock's been. Unfortunately, they do provide good cash flow. Not as good as Kroger. I picked Kroger over Albertsons. I'm glad I did so. They have been growing. Growth looks good. And it looks like they're profitable. They've been very profitable the last 2 years. So that might be worth looking at. I haven't looked at Albertsons in a long time, but it looks pretty good. Looks pretty darn good. So thanks for asking. Michael Anthony. Yeah, so I think you were talking about the BHVN stock, and their pipeline looked loaded. A lot of drugs coming. And, PFE versus BVHN, I think they're two different animals. Pfizer, I would compare against like Eli Lilly, Novo Nordisk, Merck. It's kind of like established, older pharma companies, and kind of go head to head, which one's the best one. Because it'd be highly unusual for one of those stocks to like go 10x, 20x. Just, it'd be super unusual. Eli Lilly went on a tear. So they were that special company. But BVHN, if they make it, they will multiply money. They will take a $100 stock and it'll be worth $1,000 because they're going into a very organic space. Nobody's providing a treatment for these people that have these conditions. And as soon as they get there, boom. I've seen it with United Therapeutics. I've seen it with Catalyst. I've seen it with those drug companies that once they get to market and they have that market that really needs that drug, boom, they take off. So I view them as two different animals. I wouldn't put them in the same bucket. I would actually have different buckets. Pfizer is more of a lower risk, good dividend stock, and then the other one's potentially a big gainer, humongous gainer. So Zubio. Now, you can download the app. There's two choices. You can go with the Apple choice or the Android. Take a look. It's an app you can check out for free. If you want the VIP content and uh, the content and information that's reserved for the paid members, we have a special offer. You buy 1 quarter, you get 1 quarter free. So take a look. Thanks for asking. Android PC. It's been a little while. Good to see you. And you got a comment on Kroger revenue growth. So you're right. An individual quarter could show something, but if you look at the year, they've grown their revenue. So they could have, 1 quarter prices were lower, maybe on their fresh foods, and you could see that dip. But I think overall Kroger, I mean, it's a class act. I can analyze Kroger for an hour, and I think it would not change. I've been analyzing Kroger for years, and it's a class act. Very well run company. The app is just the Victor H Investing mobile app, and you can download it. You have the QR codes on the screen, and you can take a look. Please take the survey. Tell us what you think the app, how the app could be improved. I'd really appreciate that. Mike, the dividend investor guy, got to run. Thank you, buddy. Thanks for the review of the app. Really appreciate it. All right, cool. All right, guys. So this has been an awesome live stream. Thank you, all of you, for attending. It's been a really good session. And I think I'm going to land the plane, as they say. But every Thursday night is going to be reserved for the simplified investing. It's going to be, for the most part, I'm going to use the mobile app every Thursday night like this. And I'll probably mix it in other days of the week as well. I'd like to have a morning session. And I'm in the United States. I'm in California. But for a first live stream, I really appreciate everybody coming in, and really enjoyed talking about stocks. I hope the market ends the week on a high note, right? We had a stupendous Monday. Boy, it's going to be tough not to have a good week this week, considering that we had such a good Monday. So let me say good night to all of you in the United States, and wish you a very good Thursday, or maybe a nice Friday morning to some of you. I saw some Asian characters on the screen on the chat, and I'll be back soon. I'm going to live stream tomorrow, and I'm going to live stream tomorrow evening, and on my regular channel. But again, Thursday nights is going to be for the simplified investing. Take a look at the mobile app, and please provide feedback, ask me questions, and we'll go from there. Everybody, thank you so much for attending.